what's up, guys? It's your boy MIA, and today we're going to talk to you about the upcoming Netflix earnings report. But before we dig into that, please take a second to like this video, subscribe to the channel, share this with a friend if you would. And now, let's dig into it. Okay, so Netflix earnings coming out Tuesday after the bell, and they have got hammered this year. Shares have fallen 64% so far this year, making it one of the worst performing stocks on the tech-heavy NASDAQ. However, Netflix has outlined two ways it plans to reignite user growth. The first is to crack down on password sharing. As you look at those rising prices, obviously more and more people sharing accounts, and that is currently being beta tested in Latin America, so we should have data on that in the upcoming months. Second, more ambitious plan is to launch its ad-supported service. Recently got news on that, and according to a blog post from Greg Peters, the company's CEO, the basic plan with ads will offer everything people love about Netflix at a lower price with a few ads in between. But there will also be some other important trade-offs consumers will have to make if they want to snag that half-price Netflix. So viewing quality first and foremost will be an issue. $6.99 plan will only be available in 720p, so no full HD. But the bigger issue, not every show and movie in the Netflix catalog will be available due to licensing restrictions. Now they say from 5 to 10% of titles will be MIA. However, Netflix has said it's working to hammer out new deals to get rights to these titles, but didn't offer any timetable for when that might happen, nor give any examples of what may and may not be streamable. So lots of questions there. In the blog post, Peters also said an average of 4 to 5 minutes of ads will play per hour, popping up before and during shows. In a press call, the company said there would be no more than 5 minutes per hour, and that there will be tight frequency caps to make sure viewers don't see the same commercials over and over. Ads will also boast a premium feel. Look for cosmetics and electronics, but not political and reverse mortgage ads. So now let's flash back. In April, Netflix reported a loss of 200,000 subscribers during the first quarter, its first decline in paid users in more than a decade, signaling deepening trouble ahead, and we've seen the reaction. April 19th, earnings came out after the bell. April 20th, the stock plummeted. Closed the day down $122.42, dropping 35.12% on that news and on those further expectations. So, fast forward. During Q2, Netflix expected to lose 2 million subscribers and was excited to lose far less at 970,000. The company will hope to stop the bleeding going forward. There are still growth opportunities with linear TV largely being replaced by streaming, although that is becoming a more saturated audience. But looking back at the July earnings call, July 19th after the bell, earnings came in. The big figure there, like we said, 970,000 subscriptions lost, up against the potential of 2 million. Stock gained about 7%. Now, Netflix growth is largely reflected in its stellar price performance over the last decade. It's still up a mind-blowing 2,395% over the last 10 years, crushing the benchmark and its peer groups. Trading around $232 a share, Netflix has a price-to-earnings ratio of 22 times, much lower than the 65.1x it saw earlier in the year, and far more reasonable than the 2,640.6x high over the last decade, and the median of 111.9x. Now, the big question on everyone's mind, how will Netflix react to these earnings? This has to be looked at twofold. We got to look at the financials. You got to look at the sentiment. The consensus estimate for Netflix Q3 earnings is $2.12 per share, representing a 33% decrease from the same quarter last year. Operating and expansion costs appear to be weighing on Q3 earnings as sales are expected to be up 5% at $7.85 billion. So mixed bag on that. Wall Street also forecasts that Netflix will report a 28% fall in operating income, which is its headline measure, to $1.05 billion. Income at the bottom line is expected to drop 33% to $957.5 million. So, upside. Here's the upside. Netflix has said it's aiming to add 1 million subscribers on a net basis, which would put it on course to end August with 222.5 million of them on the books. Expected to continue to lose subscribers in North America, but counter this with strong growth overseas, particularly in Asia. Okay, so will this ad-based subscription be enough to resurrect Netflix? only one way to find out. Tune in on Wednesday, and we will be covering all the action from the night before, as well as all the action of the coming day, as we do each and every day here at Outside the Charts. So be sure to tune in. Leave us a like, leave us a subscribe, drop us a comment. Hope to see you all soon. Thanks for watching.